Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg bringing up the fresh brew of financial updates. RBI MPC raised rates by another 35 basis points, which was majorly discounted by all the market participants. RBI was also accompanied by the Canadian Central Bank in raising rates. Few interesting updates by our central bank caught eyes, like the hedging of gold through IFC set up statements about being open to curbing excess volatility in rupee, as well as the readiness in injecting liquidity if needed, although currently moving ahead with tighter liquidity. We also have the Gujarat and Himachal state election results today. With so much of activity going on, we thought we'll bring in some fresh perspectives, and hence, welcome Pankaj. I'd like to know your thoughts. What are you thinking about the markets?
Good morning, everyone. So basically, central banks are still in a tightening mode, even they are getting a sense that inflation probably is peaking. So India was the second in the raft of a central bank rate decision for December. Just a day after Australian Central Bank raised 25 basis, RBI MPC raised 35 basis to 6 quarter, and which is basically 5 out of 6 members have decided to vote for rate hike. GR Verma did not consented for the rate hike, while Asima Goyal, who was earlier saying that why the rate hikes are required, she consented for the rate hike. RBI MPC also continued with the stance of a withdrawal of accommodation to ensure that inflation remains within target going forward. Now, the sense which market has got after this is RBI MPC will be live mode till that time FOMC Fed stays live on the rate hike mode. RBI also insisted on breaking core inflation lower. So broadly, market is expecting that 25 basis rate hike would be there in February also. What RBI indicated on data that growth was slightly revised downwards to 6.8% from previous 7%, and full year inflation 22-23 inflation at 6.7%, and after that the inflation would also be moderating. The general tone of the policy was hawkish, but sounded upbeat about India's growth trajectory. RBI governor specifically indicated while they are revising the growth downward, but still it's one among the highest growth rate in the world. Rupee, which initially weakened to 82.75 in early trades, maybe before RBI MPC, they would be thinking there would be a rate hike or maybe a lower rate hike, strengthened steadily after that and moved towards 82.40 later. We sense that there was some intervention at central bank to sell spot around 82.70-75, and they indicated also that forward premiums are likely to go higher. I think Deputy Governor Mr. Michael Patra clearly elaborated that maybe now people were holding dollars in anticipation of a RBI MPC. Now they are basically supplying dollars. Later in the day, Canadian Central Bank also raised policy rate by 50 basis. But they flashed a yellow card by sounding more cautious about its willingness to press even higher interest rates in 2023. But Canadian dollar is not, the currency is weakening. Now we are seeing interesting moves are happening in the US yields, which broke fresh retracement low across tenors, but more in long end, with the 10 years falling to 340. Now the curve inversion between 2 years and 10 years is a new low of 84 basis point. This all happened after the unit labor cost, which came with a range of a 2.4% and against the expectation of 3.1%. That put pressure on the yields. We are seeing a slightly moderating in equity indices moving lower. Basically, it seems that both on expectations of global economic slowdown, as well as there was a news of Apple and Tesla hitting a lower production. Dollar index was basically hovering just above the recent lows as slumps in yield depressed it, while the euro, which was the highest weightage in the index, was firmer than most of the currency, aided by elevated inflation expectations. It is quite noticeable that the dollar used to enjoy economic front, now it's getting reduced off late. Also, keeping dollar has been continued strength on the yuan, now well confined below 7. So we are seeing that the last 2-3 trading session, dollar CNH stayed below 7. Now China is continuously relaxing various COVID rules, and that should help the economic activity pick up. Coming back to India, after the rate hike, 10-year yields moved towards closer to 728. There was a 7-8 basis point move higher. What we are observing, Teja, oil prices have been a free fall this week, with WTI back to trading slightly above $75, but it traded below $75 per barrel also. The market remains unimpressed by the G7 oil price gap that has not led to any anticipated price spike or supply shortage. Brent also has hit a 10-month low at 76.94, with investor focus now on basically global slowdown. We will be now observing, and interesting to note that whether US will begin buying for SPR reserves around current levels, which was indicated earlier that around $75 per barrel, Biden might start filling in their SPR. SPR, I think, as a 20-year low, SPR reserves. It seems that the SPR reserves are 20-year low. So they would be building it up again. We expect today's INR should be in the range of 82.10 to 82.50. That's all from me. Thank you. Have a nice day.
Okay, Pankaj, that was quite fresh and different from the regular updates that we were receiving. Folks, what we see is US has mentioned earlier about the replenishment of the SPR reserves that they depleted throughout this particular crisis period, and 75 was the level earlier mentioned. So let's see how things go about as oil continues to make fresh lows in the recent swing. Other than that, we've seen yields breaking fresh retracement levels, further deepening the inversion, which is kind of worrying concern for a lot many investors out there. But all said and done, our central bank was seen mentioning that they continue with the stance of withdrawing the accommodation, although it insisted in breaking the core inflation. But what this did was revive the sentiments of another rate hike in the next MPC. Although the central bank still continues to be positive and upbeat about the domestic growth. So there's a lot of things that we are seeing on the positive side, consumption also doing quite well. So folks, it's going to be a mixed ride, but we'll continue to provide all the sorts of updates that we have for you. That's it for today, folks. But before we sign off, uh, we have already been mentioning about the Almus Rupee Money Conference. Now, folks, I do not have to mention about how big of an event this can be for the effects in the financial industries, but on the domestic front. But you guys can witness it yourself. Do sign in and watch out the interesting set of panels and discussions happening with all the brilliant minds of our nation this Saturday. The link will be available for you to register. See you there. Thank you so much for listening.